welcome everyone. Thank you so much for joining us. This is Eduardo Buller. I am a loan officer at Allied Mortgage and also part of the group Housing Las Vegas. I have with me Mr. John Rodriguez. John, thank you for coming to our show.
Yeah, for sure, man. I appreciate being here. Thank you.
Absolutely. Actually, we have this. There you go. John, again, John and I, oh my God, that's a long applause. Okay. All right. So thank you guys for coming. What we're doing is we're changing the dynamics a little bit of the show. We're going to have one full show where we're going to have the housing group talk about housing in particular, and then we're going to have some fireside chat with people that we find interesting that have been in the mortgage or the real estate or even insurance business for a long time that can give us a little bit of more of an insight of what's happening in our town, and also just to talk about things that are happening in Vegas, things that are happening nationally, and get people's takes and opinions on what's going on, right? So we can help our public determine what's best for them, if it's a good time to buy, or even if it's not just to buy, just to get informed about what's going on. So thank you, John, again for coming. Again, guys, this is John Rodriguez. John, tell us a little bit about yourself. What do you do for a living?
Well, I do what you do. I do mortgages as well.
That's right.
You know, we've known each other now for like, God, what, 10 years, I think?
About 10 years or so, yes.
Right?
So I met John a long time ago, just a little backstory. We both came from the lending side. We started as assistants at a certain point, and then we moved up on our ranks per se, and we got to the point where we were originating our own loans, and we got together at this company, and we were there for a while, and I got mad respect towards John. I've seen his work. I've seen how he works with clients, and he's got a savant mind for sure when it comes down to guidelines and things like that. He can do the job of the loan officer, the processor, and the underwriter at the same time. So kudos to you, man.
Thank you.
So yeah, just give us a little background on you, man. What do you do right now? What's going on in your life?
Oh, man. So I guess I'll try to sum it down like really short, right?
Sure. Go ahead.
I don't even think I've ever actually told you my whole journey here into doing loans and stuff.
There you go.
I started working as a loan officer, actually.
Straight out.
Straight out. Mm-hmm.
How old were you?
And I was, I think, 20.
Wow. That's
20
incredible.
years old, yeah. And I'm gonna be 42 now.
Okay, so that's
almost 22 years.
22 years.
Mm-hmm.
Wow, that's incredible, man.
And didn't really pan out the way I thought it would.
What does that mean?
Oh, God. It was, I didn't make a lot of money. I had a lot of problems with getting people qualified.
Right.
I was very new, very rookie, and I think a lot of customers can tell. You know, they're working with someone that was a little younger, didn't really have experience in life. So I made a lot of just basic general mistakes that I don't think a traditional loan officer would do.
Okay.
And so
But this was back in the day, right? We're talking about like when things were not
2004,
regulated as much.
2000,
right?
yeah, things
So we're
were not
talking before the
regulated.
crash then.
Before the crash, yeah, definitely
wow,
before the
okay.
crash, and everything was A paper and B paper, or let's say non-qualified mortgages were kind of new. They weren't really a normal thing back then. I mean, they were there, but nobody was really doing them. And so I got into the mortgage business, and I went into title and escrow, and I worked there for a couple years, and I decided to get back into loans. So I started doing loans when the economy was like crazy. You can write a loan without, with a 580 FICO score, it was 100% financing.
So tell us a little bit about that, because I remember a lot of people who purchased a home who didn't even have credit, or a job.
Yeah, it was really easy to write a loan back then. I mean, we would write them up and close them in 3 or 4 days back then, because you didn't have to verify anything. You just needed a credit report and an application, and they had loans that were no income, no asset loans, and they were doing an ARM, so they were 2-year fixed loans, right?
Wow.
And then they would start out at about like a 5.5% to 6.5%, and they would adjust after that. And then we had the market crash in 08, right? So in 08, things got really slow, and so I went into doing processing actually in that point.
Okay.
So that's where I learned a lot about mortgages, really how to really do them properly. And so I was doing processing, and I did that for a number of years. And then I became an assistant for a loan officer here in Vegas, a good friend of mine still to this day. And after that, then I decided, you know what, I think I'm ready to just start doing mortgages. So I started doing mortgages and I never looked back. I just kept doing it and stuff. Yeah.
So just so you guys have a perspective of what the difference is with the industry standards today and the industry standards back then, he said he could do loans in 3 to 4 days, right? Which means basically in the industry standard today, we're talking about 20 to 30 days on average.
standard, yeah,
Right? So
yeah.
so that's insane that you could do that so fast.
Yeah.
So yeah, man, I mean, that's awesome that you've gone through this ordeal. And just so you guys know too, when the market crashed, what ended up happening is all these lending institutions either closed down or got bought out.
Yes.
And what ended up happening is they had to start from scratch basically to find out what regulations they were going to put in place so that there would be more of a control on who could actually lend and who was competent enough to do it, right? So in 2010, if I'm not mistaken, they come up with help me out here, with the actual, the licensing system.
Yeah,
And you actually now have to go through all this rigorous process,
Yeah.
which is not easy. Remember the time you had to take the test and actually get that license by the NMLS system and all that when it happened?
Yeah. Before that, and you hit the nail on the head. We didn't need to get, we got a license. It was like $100 to get your license.
And what did you need to do?
Nothing.
Wow.
You just had to pay for it.
Right.
That
So
was it. So now you have to pass a FBI background check. You have to take a test. You have to pass the test. You
Which
have
is
to
not
take
easy.
hours now, and quite, it's not easy at all. Yeah, you have to take 8 or 10 hours every year,
right.
right? But yeah, during that period, man, like there was a moment of about like 9 months. It felt like where none of the banks knew what to do. They were afraid to write loans. People were quitting left and right. Underwriters were just leaving, and loan officers were leaving. Everybody was quitting. Like it was a ghost town for like.
So how if someone came to you and said, "Hey, guy, I need a loan," what would you do at that point?
It was taking me like 3 months to close a loan. It went from
wow.
3-4 days to 3 months because you couldn't get any help. All the guidelines were changing rapidly. There was just not enough staff, and nobody knew what to do. So we were in a period where I remember I had a loan for a guy, and it took me like 90 days to close because I couldn't get responses. I couldn't be told what we needed to do to get this loan closed.
Okay.
And things are much different now, right? Like,
Right. That's what my next question was. So if we were to tie that to what's going on in the market today, where regulation is becoming a little more aggressive on how we do loans, how we actually establish, LLPAs are in place now, things like that. Basically, guys, what that means is people who want an investment home, putting 20-25% down, they're getting hit with higher interest rates, higher points to be able to get that same loan. So basically, they're being discouraged to purchase homes, which kind of means that the investors are kind of pulling back a little bit because they're scared of that.
Well, there's a
recession
cost to do
happening as well.
business, and with more regulations comes more cost, right? And
So
more fines.
Do you
comes more
see
cost.
something that happened, like an exodus where everyone leaves and everyone's like, oh, crap, I got to get out of this business or something like that?
There
currently?
were, right now, it's tough for a lot of loan officers, right?
Yeah.
But I don't see anybody just getting up and bouncing and leaving the industry. I see a lot of people sticking with it still and still being active in it.
Yeah.
Because it's not like bad, it's just different now.
Right.
Right? That's all. It's just different. It's just a different market. You're always going to have people wanting to buy homes and be homeowners, or people that want to invest, because if you don't, you're still, as a customer, right, as a client, as a consumer, if you don't do these things, you're kind of still left out in the water where you don't have these investment opportunities. Or when and real estate's one of the easiest investments still,
Right.
now. The numbers make sense. It's easy for somebody to budget that. It's easy for somebody to just wait long term and gain the equity on that, right? And even if it does go down for a little bit, it always comes back up because inflation is just a thing over time, over years and years and years of time. And we're talking 30 years, right? you're pretty much guaranteed that you're going to win on it.
And
Especially,
properties always gain value as far as what we
Yeah,
know
overall.
in overall. If you start doing an up and down comparison of every year, you'll definitely average an
Yeah.
upper trend for sure.
Yeah.
So that kind of ties in what I think the show should be today, and I think we talked a little bit about it before. Basically, we have a market that's very hard to deal with, and I know a lot of you guys out there are having issues or challenges finding a way to finance a house because either your tax returns are limited to a certain amount of money that you made because you're Schedule C or you're self-employed, right? Which means basically you're limited to what you're showing the IRS. But obviously, there might be other income sources that might help you qualify for a loan. So one of the things that John does, and I do as well as far as correspondent and broker, is we have products that are called non-QM. So basically, imagine like a box where FHA, conventional, all the types of loans you're used to apply to. And then if you get out of that box, there's other products out there that are similar to what you could get within the box. There's still 30-year loan options, 20-year loan options, fixed. Sometimes they don't even have a prepayment penalty. So very similar to what's inside the box, except that these programs accept different types of guidelines and things like that. So I wanted to kind of go over a few programs that I think are pretty interesting for us to talk about. Again, we have mentioned FHA and conventional, which is regular inside the box, and today we're going to talk about outside the box products that people may not know that
you don't
exist
see
out
in
there.
advertisements ever.
They don't because, and I think that's going to make save our business in the time being, because a lot of people don't fit in the box anymore.
Yep.
Because
Yeah.
it's getting smaller and smaller as we move forward.
Yeah,
right?
95% of your consumers will never see these loans advertised to them.
Correct.
So they have to come to a source like yourself or myself to be able to ask us what is available out there for them to be able to qualify for a loan.
Got it.
And you know what? Like one of the important ones I think that started it all a couple years ago was the bank statement program, right?
Okay, so go ahead and tell us a little bit about how a bank statement program works.
Well, I don't know. No, just generally it's for somebody that's self-employed. Usually 2 years self-employment history, and if they have problem qualifying with their tax returns, then they use the bank statement program, where they show, instead of showing their tax returns or their 1099s and all their write-offs, which usually ends up happening, and they can't qualify at a traditional bank, then you provide the bank statements for 12 months, and that shows how many deposits they're making, if they're consistent, what are the dollar amounts, and what's the average deposit that they're making. And then each bank is a little different on this, but one bank will say, okay, we'll take 75% of your average deposit and we'll use that as income to qualify you. The 75% is to account for 25% of the business expenses.
Awesome.
And they can use that program to qualify. And generally, you know, you're looking at least mid 600 FICO scores minimum for something like that.
So 650, 700s. Okay.
Yeah,
So
preferably closer to sevens. Yeah.
let me give you an example just so that the audience can understand. So say I'm a truck driver, okay, and I make $250,000 gross a year, right? Obviously, I'm going to try to, deduct as much as I can, and I end up only netting about $50,000. The bank does not look at the $250,000 I made, correct? They in the
correct,
box
yeah.
we talked about before. They only look at the net. Obviously, they add a few things as depreciation and mileage and things like that. But in this example, let's say they only take $50,000 of your income, but you're making $250,000, right? So what happens then is you only qualify for so little versus how much you could qualify if they could use your entire income. So that's where the bank statement programs comes in, right? So
Yeah.
I go with you, right? And instead of showing you my tax returns, I would show you a certain amount of bank statements, correct?
Yep.
How many bank statements do I need as this truck driver giving you that information?
Minimum, they ask for 6 months, but generally, the better interest rates call for 12 to 24 months.
So the more bank statements I give you, or the more history I have
Yes.
depositing the money in my account,
Right.
the less interest rate I'm going to be charged basically per month.
Correct, yeah.
Okay. So
And that's
advice
important.
for everyone out there then, if you are trying to get one of these bank statement programs, is try to deposit all of your funds into your account. Don't cash your check or anything like that. Start depositing your money, whether it's a personal account or you can do personal accounts, correct?
Show the money
Yeah, show them where the money's coming from, and then you won't need to do the tax returns anymore. You can actually try to go into a bank statement program, like John said. They won't take your $250,000 of worth of deposits, but they'll take 75% of that, right?
Correct, yep.
So that's a huge difference between a $50,000 qualifying income
Yeah.
versus almost 200,000. You see
Yep.
what I mean? So, John, that's awesome news. So, what other programs, or is there any other thing you want to touch on the bank statement program that seems
Well,
relevant?
On the bank statement program, I think that it's important for you, the consumer, to know ahead of time, that you have the same statement. So what I mean is the titled statement. So if it's under your personal name, keep it under your personal name. If it's under your business, keep it under your business. Try not to commingle funds all the time, or close one account and change it and open up another account, or try not to close a business and open up another business, because sometimes underwriters can look at that as two separate businesses, or they can look at, they can say, well, if it's your personal account, we're going to change the rules on you, and then the qualifying parameters are a little different. So I think that's really the only important thing, because what I get a lot of times is customers that change the business, or they put some money in their personal account and they put some in the business. And yes, we could mix them around sometimes. Sometimes we
But that
could
can be
accommodate
confusing,
that.
right? It can be confusing for the process.
And because it is confusing,
Right.
it creates more rules and regulations for the underwriter to put on this type of product, which doesn't net you the best result. So keep it clean, try not to mix it up, be responsible with it, and try to keep it organized.
Okay, so deposit your money in one account. Don't start other businesses around that same business. Keep it consistent and deposit your money, and at least for 6 months. And then obviously you can go up to 12 months or even 24 months, which will give you the best interest rates, right? How much do I need out of pocket for one of these programs?
Generally
Down
20
payment
plus,
percent.
20% down or more.
Okay.
Yeah.
Have you seen programs that allow you to do 10% down? Because
I have, yeah. I've seen them. I haven't even, honestly, I haven't even attempted one of those yet, just because of the requirements that they have on them. I haven't had a client fit into that yet, but I'm pretty sure somebody does. So, I don't service all of Las Vegas. I wish I did.
Yeah, so that's awesome.
Have you had one?
I just actually, yeah, I was trying to see if we could talk and compare notes. But yeah, I just got someone who is putting 10% down on this
There you
bank
go.
statement program. One of the benefits that we haven't mentioned yet is the bank statement program allows you, it does not come with mortgage insurance. So that means even at 10% down,
That too.
you even if the rate is higher, because obviously it's not going to be in the 7s or 8s, it's probably going to be in the 9s or 10s, okay? But you don't have mortgage insurance, so that saves you all that money. If you are putting 10% down, you're going to have mortgage insurance, because if you don't put less than 20% down, guys, you're going to have mortgage insurance with conventional financing. But if you go to bank statement programs, they're non-QM, so they don't require mortgage insurance, and therefore you can save some money there too.
And a lot of times it's really good, because if you're sitting in the 600s on PMI with the conventional loan,
Oh my goodness.
it's expensive.
Very
It's more
expensive.
expensive than FHA, way more expensive
Yeah.
than FHA.
Yeah.
Unless you got a 700 plus with a great income and at least 5% down, your PMI it's up there.
So again, bank statement program, great program for people who cannot show or have deducted a lot of their taxes into deductions, and now are trying to purchase a home and they can't qualify for regular financing.
Yep.
Okay, that's a good one.
Yep.
What else do you think is relevant today for people to know? Maybe someone in another situation.
Well, I think there are some other products. Let's say that you don't have the bank statements, but you've
Okay.
got the 1099s. That works too. So
Okay.
that's for somebody that's generally contracted, like a truck driver, like you mentioned,
Okay.
right? Somebody who's truly self-employed and doesn't show a 1099, unfortunately, that doesn't work for them, right? So
It has to be with a 1099, right?
It has to be with the 1099. Yeah, you can use just a 1099 to qualify. Again, same stuff going on, except we're not using bank statements this time.
Okay.
You're just looking at the 2 years of 1099. You're looking at the business license.
No
to make
tax
sure it
returns,
exists. No tax returns.
Okay.
Yeah, those are generally around 20% down. I haven't seen any of those with 10% down yet. Have you seen anything?
No,
like
I have
that?
not. No, I have
Okay.
not. No.
Yeah, I haven't seen that one yet. Higher FICOs on that one. They're looking for at least the high 600s.
Okay.
So they're pretty decent.
I think
And-
I have a question. I think a lot of people who try to ask about those programs have this insecurity that this type of loan is going to adjust or it's going to balloon. And,
No.
and what most people don't know is that they're fixed. You can get a fixed loan for 30 years with these types of loans too.
You know, we talked about the market crash, right?
I love it. I love that you found that one and you clicked it. Perfect timing. Yes.
And back then, everything was adjustable. It was hardly anything was the 30-year fixed. Now, because of the market crash, they don't want that to happen again, so they don't do adjustables anymore. Even if you ask for it, the rate is usually higher on an adjustable interest rate now than it is on a fixed mortgage.
Right. So it makes no sense to start with, right?
Yeah.
Okay.
So
That's
everything's
awesome, man.
fixed. Yep.
So we have the 1099 program, which doesn't require any tax returns, right? It does start at 20% down, just so for people to take note. Then you have your bank statement loans that require at least 6 months to 12 months of statements, or
Yep.
even 24 if you want to get the best rate.
Yep.
What other program do you think is available out there that people don't know about that might be interesting to explore?
You mentioned the DSCR.
Yes.
I actually haven't done one of those, so I want to hear a little more about it from you, actually.
So DSCR loans basically don't consider income as your qualifying factor as far as the subject, like the person, right? Instead, what they use is rental comparables out there, and they'll use the appraiser's opinion on the rental value, and then if the rental income equals the mortgage payment or more,
Okay.
then you can do a DSCR loan. So let me give you an example. Let's say you find a property and it's a fourplex, let's say, and it gives you $4,000 worth of income, and you go for an interest-only loan, and the interest-only loan is $4,000 a month, right? The
Yeah.
mortgage, the PITI
Yep.
is $4,000. If it is, and it's less than that, then you can qualify for the DSCR loan. It starts at 15 to 20% down.
So interest only on that one.
It is interest only, and it
Okay,
does
that's good.
have
That's
prepayment penalties. Obviously, you don't want flippers to come in and do a DSCR loan and
that's
flip
right.
it the
Yeah,
next day.
That's very easy for
right?
them to do.
There is a no prepayment penalty option, but the interest rate is way higher. But hey, I mean, I have actually encouraged a couple of my investor friends to try a DSCR loan without a prepayment penalty to see what happens. I've never done one of those before.
Okay.
But yeah, and another interesting fact about DSCR loans, they're coming up with a way to use the future rental income of Airbnbs. That
great.
is something
That's great.
interesting I
Yeah.
want to see.
Yeah, that's great
right?
because a lot of people have trouble with the Airbnb.
Exactly. So
qualifying.
now instead of using the appraiser's opinion on market value of the rent, they go by Airbnb value of the rent in an average area, and then they can actually pre-approve you for way more, right?
Yeah, because you make more on Airbnb than you do on standard.
Right,
rental,
so I think DSCR is mostly for people who want to do short-term rentals or a rental maybe in a high-rise. I think I have someone
Okay.
who's interested in doing a high-rise with DSCR
Okay.
loans and go from there. But yeah, that's an amazing program too, guys, that we can always talk about.
Yep.
John is a broker, right?
Yeah, yeah. Well, correspondent/broker. It's
Correspondent/broker. I'm a direct lender. It works a little different,
Yeah.
but at the same time, in the end, it's basically the same thing. We play by the same rules. We
Yep.
play in the same playground. We do the same type of loans. He may have a couple of different options. I might have a couple of different options, and that's why we work together as colleagues too. Because sometimes I won't have the program or the exact thing that I need in order for me to close a deal, and obviously I'll call my friend John and be
Yeah.
like, John, hey, can you do this? And he can, he does it. And if
Yeah.
I can do the same for him, we do. So the point about that is for people to know that when you're working with a professional that has been around for a very, very long time, connections matter, okay,
Oh, yeah.
guys? So please, whenever you find a lender or a realtor that you're working in town, make sure that they have the connections to present you with the best options out there all the time, and also that have resources in case they can't. I always say, John, if I don't know the answer to it, let me figure out an answer for you, and then
Yeah.
I'll call John, I'll call
Yeah.
other lenders
Everything's
out there.
changing too fast, too many times.
that's another
for
thing.
you to be
The-
able to know everything.
The market changes so fast, especially in a market like this. So
Yeah.
it's good to keep an eye out and also keep friends like John in your circles, because it does help a lot, John.
Yeah, no,
And,
of course. You've always been a help to me too with so many things. I can call you up and, the people that surround you as well. And, there's always great advice right there and what's going on with the market and what rates are here and what rates are there, so we kind of make sure we're in line with everybody else,
true.
right?
Exactly.
And
we're
talk
always
to
trying
our
to
jefes and tell them, hey, what's
there
up,
you
man?
go.
Why is my rate so damn high?
We have to stay competitive, right? If we're seeing other
Yeah.
competitors that are down or lower than us, then obviously it's time for us to price each other and see where we're at.
We
And
should start a
go from
loan
there.
officer union.
A
you
loan
and I.
officer?
Yeah.
Oh my God. That would be a disaster. 3 people would show up.
I know. We'd be doing all the work.
All the other loan officers would be in Maui, sipping on a pina colada.
Yeah.
But anyways, guys, I wanted to kind of touch base with you because I think it's important for us to know what programs there are out there that fall besides the normal scheme of things.
Mm-hmm.
And I think we have time for just one more. John, is there any other program that you think is relevant?
Yeah, I think there's one more, and this is more, is it okay if I go non-investor? Is that cool?
Yeah, of course.
Okay.
Yeah.
So really non-investor type of loan, it's really for people that want to live in the home and buy it for themselves and they have trouble qualifying. And this works for a lot of clients that work somewhere but can't really show a stable work history at that employer, right? And it happens a lot because sometimes you'll have somebody working somewhere and they, were paid differently. Maybe they were paid cash for a little bit.
So can I,
Maybe
a construction worker? Because that happens a lot.
That
with
happens a lot with
construction
construction workers, people that work at restaurants, bars. I see it a lot in the restaurant industry where they have you, I don't know why they would do that, but they have you come work and they pay you cash. And then later on, they put you on payroll eventually, right? I don't know what the deal is, but I see it a lot. So there's a VOE only program. It is FHA. And you can get just with the verification of employment from your job, then you can qualify for the loan like that.
Okay, so basically you use a verification of employment that takes into consideration cash or W-2, whatever the employer has paid them.
Yeah.
And use the employer's word. Obviously, it has to be an employer that you have to verify.
Yeah,
correct?
it has to be legitimate. Like you can't go in and say, oh, they're paying me $100,000.
Yeah. By the way,
we're gonna do our balances and checks, right, to make sure that what your employer is stating that they
Right.
pay you is accurate for the position that you have, right? So if you're a cab driver and I don't see this with cab drivers, but let's just say you're a cab driver, right?
Okay, right?
And you come in saying that you make $100,000 a year. We in this industry know that that is not true, right? Maybe a limo driver, right?
Okay.
But a cab driver, we know that they're probably making it on the high end, maybe 75
Okay.
is really what we're doing, right?
Sure.
So we'll look at that and then we'll take a portion of that, we'll cut it a little bit, and then we'll use that as a maximum allowed amount. So if the employer comes back with something that actually is within that range,
Right.
then we
then
can
it's
use that.
acceptable. So this, for example, is for someone who's a cab driver who, in the past 2 years, they paid him cash or he had a lot of tips or things like that, and he only has $35,000 to show on his W-2, let's say.
Yeah.
But then he really made $75,000, right? And then he goes to his employer. His employer is willing to verify this,
Yep.
correct? And then you can use that verification as long as it falls within the lines of what that person
Yeah.
makes in average in the
Yeah.
industry, right?
And
that
it's a
they're
new
in.
program, so they're kind of changing things here and there.
Okay.
So they've modified it a little bit to protect themselves, the bank, because it's very risky and they have to make sure that they're doing the right thing.
Right, okay. So there's a lot of verifications going side to side with this, but as long as you have a verifiable work history with them and they're willing to include the income that might not show on their W-2s or pay stubs, there's a way to actually include
Yeah,
it then.
yeah.
Well, that's an awesome program,
Yeah.
John. I didn't know about
Yeah.
that. Yeah.
It's a fun one.
Yeah, so that's awesome, guys. So we have about a minute left. I wanted to just leave you with John's information one more time. John, can you please give him your information so they know how to contact you?
Yeah, and let me say first off, thank you, Eddie, for having me here. I call him Eddie because he's my friend and I've known him for years. So, but I really appreciate it, having me on your show. It's
Yeah.
been great being here.
Next time is going to be with whiskey, okay? We're
okay.
going to do
Yeah,
a
let's make
fireside
it a
chat
little
with
funner next
more
time, yeah.
friends, for sure. Yes.
But yeah, my number's up on the screen. It's 702-506-3244. I'm with Loan Mortgage. You can always call me for any questions, or always call Eddie as well too. I'm sure that this is your audience, so call Eddie first, right? Make sure you guys hit him
Absolutely,
up.
guys. I mean, he's an amazing loan officer, and he's been around for a long time. And between him and I, we've always helped each other when it comes down
Yeah.
to advice on what to do in a situation that may be a little difficult to resolve. So, absolutely, my phone number is also on the screen. You can always call me at 702-542-8884. And again, thank you, John, for being on our show. I hope to see you very soon. And guys, we're out of time. We will see you on the next one. Thank you so much for tuning in. And please, we will be back on Thursday at 4 p.m. Every Thursday at 4 p.m. We're here on Facebook Live. Thank you, and talk to you soon. Bye-bye.